If you just went out and bought every stock and bond around the world, you end up with roughly, and I'm averaging here, about half stocks and bonds and about half in the US and half abroad. Now, the US amount of the equity portion has gotten bigger. So recently it's gotten up to about 2/3 of the world total. But the US hasn't always been the biggest, right? Japan was bigger in the 80s, UK was bigger, on, going back in history. There's a couple hundred years where other markets were bigger, and that's largely just because the US didn't have a market. Getting started in Amsterdam in the 1600s. But looking at that portfolio, that's already a nicely diversified portfolio. The problem is most of us in every country around the world have that home country bias. Canadians love to invest in Canadian stocks. I mean, you can't get you guys to stop investing in junior miners and cannabis stocks. Maybe cannabis now because it's down like 90%. But you
and
guys
I don't know
love
if we'll ever come back to it.
Yeah, you guys love your miners, but but every country in the world, they invest way too much in their own country stock market. It's true in China, it's true in Australia, it's true in Japan, it's true all around the world, in the UK. And that's a horrible idea. And so diversifying, it doesn't even matter which method you do it with stock markets, you end up in a better place throughout history. And that's true for US investors too. It may not feel like it in this past cycle because US stocks have been so exceptional for the past 15 years. But over history, it's been much better to diversify globally than to invest in any one country. And it's interestingly enough, is it happens within countries too. So in the United States, if you live in the Northeast, you put most of your money in financials. If you live in Texas, you put most of your money in energy. If you live in California, tech stocks. So this bias often gets you off sides, and almost never is it rewarded.